Hi guys, this is Cal once again, and welcome back to 6th of April 2023, Thursday, MAO with Cal. All right, guys, this is something that I need to tell you. This recently, my video have been a bit short, right? I think you noticed that is because I have a lot of things to handle this few days, all right? And even that today's video is like now it's at 6 p.m. I'm recording this, so I'm very sorry for that, but don't worry, I'm gonna give you content, very strong content video today. Let's go into details. Now, I believe that the US unemployment data will surge very soon, all right? We talked about this 2 weeks ago, and I said that there's a very good chance that JOLTS will drop below 10 million. And apparently, it really happened. So this is incredible because, again, once that whatever I said is seemingly is coming in. And one particular bank I'm very worried right now, and that is Charles Schwab. And I'll tell you more in detail very shortly. All right, with that, let's go into the market and make sure that your risk assessment is done. And thank you, Ames, for the kind sponsorship. Now, first of all, let's talk about something trivia, yeah? Now, Taiwan and US, what are they trying to do? Okay, so the thing is this, we all know that Kevin McCarthy went down and met with the Taiwanese president, all right, in the Semi Valley in California. And the thing is this, the question is why she need to do that, this definitely is going to piss the Chinese off, right? So that really pissed off the China Communist Party and actually prompt veiled threats from Beijing to the member of Congress who will be attending the event, all right? So the thing is this, all we can say is that, where US came up with this statement, said that he compared the island territory to Ukraine. We spent the whole year defending the brutal Russian invasion. And they actually said this, if US had delivered more weapons to Ukraine over the past decade, all right, perhaps that will change the Moscow calculus. Now, isn't that a very strong statement to tell China that, okay, if you want to continue this, maybe we should help Taiwan? Wow, okay. So with that, now we can see that they're saying that the friendship between America and the people of Taiwan has never been stronger. Oh my God, what a word. So definitely now, the CCP is not happy. They says that, right, it planned to take resolute action, wow, to respond to the provocation. Okay. All right, so what do we expect to see? Well, fireworks, that's for sure. And of course, right now, we all know that the fragile US-China relationship is really getting worse. And of course, we do know that recently the Chinese air balloon thingy and TikTok now, all this thing is definitely going against the Chinese. So I just hope that this will really stop, right? Really like small kids fighting each other. Now, at the same time, when US and Taiwan have been doing this right now, China is doing a pretty good job. And now Europe, okay, the 27-member bloc has decided to work very closely to China and see whether how can they play to make sure that they also have a affirmation with the US relationship. So it's going to be very interesting here as well. But everybody now is really want to like go near to China. They feel that there's a lot of things in China coming up. And of course, the thing is that they don't want to make US unhappy. So it's going to be a very tightrope here. And hopefully, right, this don't continue a bad thing, yeah? But we all saw what happened, what Nvdia said from the Saudi prince. I just got this feeling that we are getting nearer and nearer to a very potential Black Swan event. I just feel that it's coming in. Maybe not now, likely in August, yeah? So let's recap what happened last night. Well, basically, the Dow Jones recovered from the low, up by 80 points, but the NASDAQ dropped 132. I warned you guys that the NASDAQ will be affected. And of course, S&P down by 10 points. Majority of it is Microsoft, Apple, Amazon down, but the one that I'm focusing on was Tesla. Now, Tesla is trading back to 185 once again. And I said that anything above 220 will be a good sell for Tesla. So let's see what happened. Well, apparently the NASDAQ performed the worst of the three indices. Now, the main reason is because of the inflation worry. Now, last night, the ADP private payroll came out, and it's actually, we can see that it's actually weakening. All right. So the number is like, it's 100 plus thousand. I'll take a look at the number. But the thing is this, the GOLTS down by 10 to burn below 10 million. That was the first time in 2 years. So the thing is this right now, right? The people are wondering if the central bank has gone too far in a bid to cool economy, cool the inflation, then by tightening the economy to a point that now we're going to have a recession soon. And I've been telling you this, isn't that what Jerome Powell say? He will do all his best and to make sure that there will be inflation coming down. And of course, there will be pain. He's been saying this for so long. So what is there to be worried about, in my opinion? So if the markets start to price in for this potential pullback, then a 10 to 15% drop is kind of expected, yeah? Now, do note today, it will be last trading day because tomorrow is Good Friday. So take note of that, yeah? But because of, even the Good Friday, right, the NFP figure will still come out tomorrow. Now, one thing on this is the Tesla. Okay, so Tesla, I was saying that anything above 220 will be a good sell, but it didn't go up. This time around about 210, that's good enough. And you can see that it's still staying below the blue one is the blue is 200-day moving average. The one in purple is 150. So basically we have a rejection of 150 days and now it's pulling back. So I strongly believe that Tesla will come down to 173 again. All right, quite confident on that because you can see the indicators are pretty clear that there will be more selling pressure, even though the volume is increasing, but it's still on a downdraft. Yeah. So let's take a look and see what will happen for this Tesla. And of course, one thing to take note, Tesla itself, okay, now there are two NASDAQ stocks that are responsible for the 40% of NASDAQ gain in the last 90 days. And 7 stocks are responsible for 90% of the gains. And the 2 of them are Tesla and Nvdia. And of course, we all know that NASDAQ have 3,000 stocks, but as long as Tesla is going to be down, then undeniable NASDAQ will be down. So I'm not half surprised that there will be more selling in the NASDAQ in the coming days. All right, so that's my view on Tesla. Okay, let's look at the economic front right now. So what we saw was yesterday, the ADP number come out 145,000. So that means lesser people in the private sector. So that's a worry. Is it because that the interest rate is hiking, hence lesser people going to get a job? Well, isn't that what it's supposed to be? The only way to bring down inflation is not just hiking interest rate, it's to basically reduce employment and of course increase unemployment. So with that, right, we should take note of today, at 8:30, the initial jobless claim. Now this figure, I suspect it will be higher to 220 today. So let's take a look. And if that all happened, then of course the non-farm payroll, which is the public sector, we expect the number to fall. Now apparently, right, the last time was 311. This time around, the market is looking at 240. I just got a feeling that we may see 198. All right, guys, leave your view on this tomorrow's non-farm payroll. All right, I don't know what number do you think so. Then we will actually put your name into the list so that right next Saturday we will do the spin the wheel lunch with Cal. All right, next week we will see which restaurant we're going, but of course you can start doing your comment right now. Okay, so that is this part here itself. And of course, we can see that the ADP number has been dwelling down all the way since back then in the pandemic period. So all I can say is that that means that a recession is really, really nearby. All right, so traders be very, very careful on that. All right, so the thing is this, what if there's a bank panic, right? Then what will you do? So apparently, right, the bank panic created this pocket opportunity with yields as much as 8%. Wow. So what is this? Now, because right now, right, of the current banking turmoil, so now the thing is that there are people are going to go for stocks that has yield on preferred stocks with the big 4 banks with a 10-year high. So they're saying that right now they're going to go for preferred stock that have characteristic of both bonds and stocks. They trade on exchange like stocks, but they have face value and pay dividend like bonds. So it's a new deal they're looking at, and of course, we are having more and more people going for that because they offer as much as 8%. Wow. So primary are Bank of America, JP Morgan, and Morgan Stanley. All right, these are the key banks that is like considered strong. And of course, some of them yield as much as 8%. Well, that's a lot of money. All right, so of course, the next things that you for AT1s. Now, AT1s are the preferred shares of banks and additional tier 1 bond. Now, they are good when things are fine, but they can be very bad because like Credit Suisse, they all AT1 bond lost all their money when the bank was taken away by UBS. All right, so take note that for this AT1s, if you actually, has lesser than when you are involved in this thing, you must understand that when they pay you high interest, that means that there are risks, especially when banks goes under. So take note of this AT1, very, very crucial. All right, so of course you can go for some exchange traded funds like the Invesco preferred ETF, and also the ICE and Bank of America core fixed rate preferred securities. And of course you can go for this one, ICE, ICE Bank of America Diversified Core US Preferred Security Index. Wow, long name, yeah. So all these yield between 6 to 8%. Wow, that's a very good money. Rather than put in a bank, you can try this. Okay. Now the thing is, the question is the bull? Are the bulls are buying, waiting for the big bull to come? Well, using the AAII Bull indicator, we can see that now where we are now at the same time as bad, if not worse, than what happened in 2017. And of course, the market got dipped a little bit, not fantastic. And then now what happened? Is they going to see a bigger dip right now? So that's something that we need to watch out for. But on the same note, when you see that the numbers are at the very low end, that means that there could be a chance of a recovery soon. So basically, right, if you want to recover, you have to, go through this for all right, you need to go up, get yourself killed, and then recover, and then come back in again. So that is what I'm trying to say for this. Now, take a look at this, and a smaller number of stocks are outperforming the S&P 500. Now, this is not a good sign, yeah? Where you can see that when the numbers basically goes down to below 30, right? That is where the selling will have started along the way. The market won't wait until the day comes, then they start to sell, right? It's actually on the way down, they start to sell, so watch out for this. And of course, because of that, there will be a point of a V-shaped selling, and then after that, we have the straight away recovery bull. So just wondering out front, what will that be happening for this year? Because I can see the numbers are coming down, and there's a very good chance that we can do a what do you expect the market to tank, in fact. So all these are something we already expected, especially by August 2021. Now, this is the 10-year yield and 2-year yield when they inverted. Okay, now you can see that once they inverted, right, you can see there's a turning point here. Okay, you see that once they inverted, right, you can see very clearly what happened. Straight away, the stock market will plunge. Wow, the stock market will plunge. The stock market will plunge. So obviously, guys, what do you think will happen? Now, of course, you can argue that it came down, all right, but there's not a lot, because we need to really see going below the 80% mark. And of course, we want things to really be taken care of itself. So you can see that we are still pretty far away and things can get worse. All right, so this is the unemployment rate right now versus the S&P 500, and you can see very clearly that whenever there is a surge in unemployment data, the stock market will actually fall, okay? And similarly, you can see that when it's upticking, they'll say that, okay, why don't you ask me more? And same thing again, back in year 2000, same thing again, what happened? Well, that's the issue here. So you can see that whenever that the unemployment data is about to surge, right, the stock market, they don't react positively. In fact, they react negatively. And of course, this is something that's been proven since 1991. So you don't need to ask any PhD, but these are these answers. So the thing is this right now, you can see very clearly the one job opening is really now at $9.9 billion. All right, this is really, really incredible. And the thing is this, the unemployment on the right is only just here. So by right, they move in tandem, but now you can see they're moving away from one another. Hence, therefore, believe that there should be something big going to happen, like a recession or a very big company going down at the same time. All right, so you can see from here, so the GOLTS tumble below the 10 million mark for the first time in the last 2 years. Wow, this is no joke. So we'll watch it together. All right. So one thing is that Bank of America just said that they witnessed the biggest week of outflow. Wow, this is serious. Now, basically what happened is that despite the rally in the US market, the equity took advantage of this by selling away the S&P when it was up by at least 4%. Wow, okay. So do you agree on this one here? All right, so up by 4%. And after that, what happened? This thing here, right, continue moving in. And of course, the firm says that, well, this is going to be a very interesting fire sale on the broker's stock. And then, of course, things get way out of hand, yeah? All right, the thing is this, well, hedge fund are all net buyers and equities too. The sales are all outflow, but that is the recorded in the communication service sector, whereby now Elon Musk is saying that he's removing, all right, and second largest outflow since 2008. All right, that means that there is going to be a very big movement coming in. Because when you have so much outflow, right, then who's holding it? That's a big question. Now, you know that oil is going up. We have a lot of financials coming down. So really, I cannot see how can anyone be asking to get this thing up itself. So maybe we need to learn, yeah? Okay, so that is what we have over here. So now the thing is why Charles Schwab is in my list of worry, because take a look, guys. Charles Schwab was trading at $76 before the SVB blow up. And even it blew itself, most of the banks are already recovery like this. But what we are seeing right now is something very different. We have a market who's been okay, a bit slow today. Then when you see this, they have to go the other way around. So that means that it's not the fault of trader, but it's really, you can see that things are not going fine for Charles Schwab. And if you look carefully, now we're at $48 right here, and that is the lowest point. And the last time it was still positive was 76. So wow, look at it, 30 years different, but still look very young. And the thing is, for Charles Schwab now, the thing that the price has been coming down, and coming to the last time, the low at $48. So I suspect, pretty sure that she is entering this recession, and we need to be close with her. on this market, and then we don't want to make any mistake because this could be a very, very big run for all of us. Yep. So take note of that. Charles Schwab. And of course, right now, Charles Schwab, 7 trillion empire built on low rates is showing cracks. So when they invest on low rate and now the rate is higher, they have to really pay off the interest. If they don't want to do that, then of course, then this bank will suffer and then it will be a belly up soon. Yeah. So take note of that. Now, all this information is very, very important. And last but not least, this is S&P 500 Technical Outlook. Now, last time I showed this, and people were asking me how I draw that. I said they're very simple. Come to my class, I'll tell you how to do. But the thing is this, right now, we can see that the very strong resistance is happening once again, but it's on the downward trend. So the intersection point is actually today 4088. So which means that if you actually goes in or under 4088, well, that means that there will be further downside to go. And the downside can press down all the way, all right, to maybe here itself, and that will give us about 3950. All right, that should be the next target for the S&P 500. I suspect that there's S&P downside. It will go there, and then we'll see whether that will come with a stoppage. All right. Okay, that will be all for today. Thank you very much for listening and waiting for me. Just remember that from the way things are moving into politically, I believe that a black swan is just around the corner. All right, I'll see you on the technical side. This is Cal signing off. Bye-bye.